Don't be scared and don't let the gloom and doom rhetoric keep you out of your financial goals. Stick to your plan and don't let the news or the people on YouTube or anybody else scare you out of doing what you know is right for your financial decisions. Stick around for the video today. I'm going to go over the 7 stocks I like the best and they're the largest in my portfolio. I'll explain what I like about them and my investment strategy overall. Hello, my friends. My name is Adam Kahn, and I'm the Rational Investor. Today is Sunday, February 18th. I hope you're all doing well. I'm going to get into a little bit of detail of the 7 stocks that I have the largest position in. They're also the ones that I like the best. So stick around. I hope you like the video. I'm also going to discuss my investment strategy, which is what I'll talk about right now. I call it buy and own. Not even buy and hold, but own forever. So my general philosophy is pick stocks that you love and stick with them. Own them. Invest in them because you think they're great companies and stick with them for the duration. The only reason I see to get out of a stock is something changes fundamentally in their business plan. Because what I find is the earlier you put money in and the longer you hold things, the better chance you have for compounded interest and for it to grow over a really long period. If you're constantly getting in and out of things, you never give it the opportunity to grow the way it could over 10, 20, 30 years. So I think people are a little short-sighted. And when I give these stocks that I'm going to go over today, don't worry about if they're up or down next year, or next month, or the next 6 months. It really doesn't matter. When I pick stocks, I hope that the companies are going to be bigger in 5, 10, 20 years. It's not a concern of what their earnings are next week. It's a concern of what their earnings are in 5 or 10 years. So if I think a company is going to be able to continue to grow, and generally I look for companies that I think are dominant in their field, or I try to pick the best of the best. And again, this is not financial advice. You guys need to make your own decisions. You need to do your own research. I wouldn't listen to me or, for that matter, anybody else on YouTube for making financial decisions. It's just a conversation, and it's a little bit of what's worked for me over the years, and I try to share that because I like what I do. So let's get into the stocks, and really you're going to see I'm not like stepping out on the ledge and picking anything that anybody hasn't heard of. I try to go for big companies that I'm comfortable with, and I think I know enough about to make those decisions. So number 1 on the list in my largest holdings is Meta. I'm a big fan of Mark Zuckerberg's. I think they got out of favor about a year and a half, 2 years ago when the market dropped a good bit when he changed the name from Facebook to Meta because he was going into the metaverse. But the interesting thing is what I think he saw as limited growth if he just stuck with Facebook. I get Instagram is great and WhatsApp and Oculus is growing as well. But I think what he saw is the parent company of Facebook, while it's huge and it's a great cash cow, that the next generation, the younger kids, really aren't gravitating it for the way that our generation or the people who use it now currently are. I try to bounce this stuff off of my son. He's 13 years old. And I said to him the other day, how many of your friends are on YouTube? Or, forgive me, YouTube. How many of your friends are on Facebook? And he said, he didn't know if any of them really were, and he doesn't use it. I think that's what they see going on. So when he switched to the metaverse, he still has this drive to continue to grow and grow his company, which is what I love about it. I think he's still young and he still has ambition and he wants to build it to the best it can be. So he sees this vision of growth and he's changing direction a bit. I understand that spooked the market because they don't like uncertainty, and this is uncomfortable because he's spending a ton of money on something that's the unknown when he had this great cash cow. But what I like is that gives an opportunity for the company to continue to grow. It makes me think he's a fighter, and he wants to see them be the biggest and the best of whatever it is he can make it. I think this last quarter's earnings really shows, boy, he's doing incredible. They made they made $5.21 a share. And if you multiply that out 4 times and you get $21 or close to it, right? The price to earnings ratio really isn't that outrageous despite the big move that it had after the earnings. I think the reason it had the big move is people see the potential of what it could be. And with this year being an election year, and I don't want to be that guy that says, oh, it's an election year, things will be great, because sometimes they are, sometimes they aren't. But what I think is there'll be a lot of advertising, which is where the bulk of their income comes from. So the fact that he's like streamlined, he let employees go, he cut some fat, and he's really focused on trying to make money, and he's even working on monetizing WhatsApp at this point. I think what you're going to see is that earnings really come into play, and he's going to be able to grow it in a way that people haven't seen in the past, which is going to continue to drive the stock price higher. Again, not financial advice. You need to do your own research, see what you think of it. Don't just rely on me. I'm just some guy with my own opinion. I'm not a financial advisor. I just like this stuff, so I read up, and it's what I like to look at. So number 2 on my list is really going to show you guys how I step out and try to find that company maybe you've never heard of, which is called Amazon. So this is a company that maybe you've heard of, maybe you haven't. They do deliveries of pretty much anything you could use. They also have Amazon Web Services, they have Prime, they have video, they've expanded into a zillion different things. And do you think Amazon's going to be bigger in the next 5 or 10 years? You know, part of one of the things that I really liked about Amazon is I'm fortunate enough to have some travel the past couple of years. You know, when my son goes on summer break, we try to take a trip. Well, we went to Europe 2 years ago, and you don't see many Amazon trucks. And then we went to Asia last year, and I don't think I saw one, which tells me their ability to grow and continue to expand. I mean, they really dominate the market here in the US. When I first found Amazon, which was pretty much during COVID, because I didn't feel like going out too much, you know, you start recognizing their prices are really good, but as you use them more and more, the convenience of just how their system works is really what I'm attracted to now. It used to be that I would search because their pricing was so great. Now I'm not as price sensitive because of the ease of use. I order something, it comes to my house sometimes the same day, and sometimes the next day, and sometimes you have to wait a little bit. But if it's not a good product and you're not happy with it, it's easy to return. You just click a couple buttons, and for us, you either go to Kohl's or Whole Foods and you drop it off. And refunds happen quickly. They're very good about that, same way like Costco is, which isn't on my list, but I think they're a great company as well. Um, and I just think that they'll be able to continue to grow in that fashion. So I really love Amazon, and their Amazon Web Services is one of the biggest growing aspects of the company. I also think that Prime Video might do better and better over time, but I guess we'll see on that end. But they're really a huge, massive conglomerate, you know, that I just think is going to continue to grow over the next 10 years. And like I said, unless something fundamentally changes in my mind, these are companies I want to be invested in, and I try not to worry about if they're overvalued today. Because sometimes what you find is companies can stay overvalued for a very long time, or they can stay undervalued for a very long time. Very long can be 5, 10, 15 years. I mean, it's amazing how long a company can be overvalued or undervalued, and they stay in favor or out of favor. So I try not to stress about that, and I hope the earnings, you know, grow, and I hope they continue to perform, but I try not to worry too much on today's valuation of great companies. Great companies are just what I want to own. Number 3 on my list might be the only, well, no, it's one of the few that isn't tech, which is Starbucks. I think Starbucks is a phenomenal company. I think it's been rough for me that I haven't seen them do too well the past few years in terms of stock price, but I think eventually that'll catch itself and it'll start to grow and do well from there. I think right now they're just in this place of between what's going on in China, between what's going on with their employees talking about unionizing and whatever else. Maybe it's hurt the stock price, but I'm hoping this year they break out of that range and start going higher and catch themselves. You know, I kind of think of Starbucks as this generation's version of McDonald's. All the kids go there, they know what drinks to get. And the interesting thing to me about Starbucks is they have great pricing power on top of it. They've always been thought of as expensive. You know, when they first came out, I thought it was interesting because We used to go to a diner and you could get a coffee for 35, 40 cents. And here came this company that was selling coffee for $2, $3 instead of the 25 to 50 cents it was at restaurants. Well, not only did they do well, they've thrived. And people are kind of addicted to their Starbucks. So when prices go up, it doesn't seem to hurt much, and they just have better earnings and grow their profits. I think there's a certain point they can only go to before people kind of back off, but they seem to have that ability to raise their prices and grow. And when I think of McDonald's and what they've done over the past 30 or 40 years in terms of growth, I think Starbucks has that same potential. But you're going to have ups and downs. You're going to have periods where it doesn't do well. When I look at McDonald's chart and what it's done since, 1990 something when I started watching it, in that time frame, it had 2 or 3 periods where it fell in half. But meanwhile, you've gotten like 50x or 100x on your money if you just stuck with it. So that's my hope with Starbucks, is they're just in this period where they're not growing right now and the stock price is stagnating. But once they break out of that range, I hope they go and they just go and go and go. Now, again, like I said before, you need to do your own research. Don't listen to me. I'm not a financial planner, and this is not financial advice. This is just my opinion on different companies. Number 4 on my list of favorite companies is Google. YouTube for you guys as well. Another one that I just love, and to be fair, I think it's the most fairly priced one of all the top 7 or whatever they call it, Magnificent 7. I think their price to earnings ratios, their EBITDA pricing and cash flow and everything else makes it extremely attractive. I think the street's been a little negative on it because they think they're behind in terms of AI and they think the search is in jeopardy of being challenged, but I think like things, they have a name and people go to Google first. Even if the search of other companies starts improving or competing or whatever else, like my first instinct is to look on Google for something if I'm searching something. I think that'll continue for a long time. They also have YouTube, which when I watch the kids, that's their version of television. I'm amazed that Netflix does as well as it does, to be perfectly honest, because YouTube seems to be where every kid that I know goes for content. And since I found it, it's where I go as well. I don't even have cable anymore because I use YouTube and I can pick specific topics that I find interesting. I watch other finance people and I watch some real estate guys. I find the content interesting, even with the ones that I totally disagree with. Like some of them, I really like their personality. I think they truly believe in what they're saying. I just have a different opinion. And then some of them, I think they just do it to try to get views. And maybe they have that opinion, maybe they don't. On top of that, I watch travel videos that I love because I love to travel. So I get to see about all these places that help me make my decisions on where we might go for our trips and whatever else. And I think it's a great ability to pick what you want and watch just that. It's kind of cool. I also play poker, so I watch a lot of the poker videos, which I think are kind of cool. Um, it's kind of, I like the shorts for the poker. I don't know that I like watching the half hour videos on poker games. Hi, Winston. Anyway, Google's a behemoth. I think in the next 10 years, they're going to continue to be bigger. And again, unless something fundamentally changes with the company, I just own these things forever. I mean, what I really hope is, this will sound terrible, but one day when I die, my wife and son get really lucky and they've done well. You know, I talk about a story about when I was a kid and fortunate enough to be able to buy a few stocks and how it worked out. And the point of the story is I bought 5 different stocks. 4 of the stocks, well, one I can't remember. So 3 of the stocks no longer exist. It's like Eastman Kodak, Chrysler, and GE. And while GE does exist, the stock that you see is not the one that I own. So they had to restructure, and the one that I own no longer exists. Well, the one that I did keep, it did so well that your profits really made perfect sense over the time frame over the past 35 years if I stuck with all of them. So you don't have to be perfect. The goal is to pick really good companies and hope that 1 or 2 of them just do incredibly and you end up doing really well on your return. Part of why I don't like ETFs is I don't want to own companies that I don't think are good companies. And if I own the S&P 500 or something similar, I'm owning all the lousy stocks along with the ones that are good as well. So number 5 on my list is a little bit more of a risky stock and one that you really may not have heard of, which is Nextera Energy Partners. Ticker symbol is NEP. What I like about it, Nextera Energy Partners, is they had a really rough run, and maybe it's a bit of a yield trap because part of why I liked it is the yield for the dividend went up to like 13, 14%. I think it even got as high as 15% at the low. I still think they're a really good company, and the news that was out there wasn't so bad. So unless something is going on that's not being reported in the news information, which is always possible. Like sometimes the people who know information that hasn't hit the news yet. Maybe there's some bigger problems and the stock continues to go lower. So I'd be real careful on NextEra Energy Partners. I dove into it maybe foolishly, and I understand that, and I'm okay with the risk I took, but maybe they're legitimate problems. But what the news was essentially is they cut their future earnings growth from somewhere around like 11 to 15%, and this is about what they thought they could increase their dividend rate at, to only being able to increase it from 5 to 8%. Well, if it's already currently paying, I think it closed on Friday paying 12 or 13% dividend. If that can continue to grow at a 5 to 8% interest rate, on top of what it's already paying, it's way undervalued. Again, maybe I'm missing something, but getting 12% return at a growth rate somewhere between 5 and 8% is awesome. And if it comes as a dividend, so I can use it to live on, I love dividends. Like I said, I hope it's not a yield trap. I hope I'm not getting drawn into something that's a dead stock because the yield's attractive. Because generally, when things are paying that high return, it's hard for them to grow from there because it's hard to commit to that type of return. The interesting thing to me in this is I just think the stock's going to be way underpriced. I think that what'll happen, and this is just my opinion, you guys need to do your research, is if and when the Fed starts lowering rates, and as your return on treasuries and CDs and things like that come down, and people start looking for avenues of where maybe they can get better return, by the time they start looking at it, the stock price on something like Nextera Energy Partners is likely going to be higher. When I do my analysis of a company getting the return that it's getting, I think the stock price should be closer to $40, $45 a share and growing at the rate they're saying it's growing. Again, maybe something's going on and maybe there's a problem that I don't see. But if they're paying 12%, it really makes more sense that they should be paying 6 to 8% return, growing at 5 to 8% interest over year. And they've been able to do it at least the past two earnings reports. They've had decent earnings. They've been able to raise their dividend the past two reports and right in line with what they estimated. So it's also giving me more comfort that they're actually just having exactly what they've said, and they're going to be able to continue to raise that dividend. So I guess we'll see. And those of you who don't know what they do, they're the solar and wind division for Nextera Energy, which is the largest energy producer out of Florida. They used to do gas as well, but they recently just sold their gas pipes to Kinder Morgan so that they could just focus on renewable energy only. And I think that's a great industry that went out of favor at the same time. So I watched the stock drop from $80 to just above 20 over the past year and a half. I think it's on sale. Just my opinion. I guess we'll see. Number 6 on my list is AbbVie, which was a spinoff from Abbott Labs. It's just become one of my larger portfolio holdings because of how well it's done. I picked them because I like big pharma, and I thought it was a good space to be in, and I think they were paying a really good dividend. They've continued to be able to pay that dividend. I think they've even grown it a little bit, and the stock's done extremely well, so it's moved up in my portfolio from the amount I invested to where it is. And this is another thing that I try to say about buy and own, and it's similar to Meta and some of the others. I really don't believe in rebalancing. I think if you buy good companies, and some of them are really doing exceptional, if you rebalance, you ruin your ability to possibly hit a home run. So I do my best, unless it becomes such a big portion of my portfolio that it's super uncomfortable, to just stick with it for the long run and not get nervous because now it's become 10% of my portfolio or something like that. I really just try to buy these companies I think are good and just own them and not worry about day in and day out. Now, I keep a smaller account. I know I did a video on this as well that I use that I like to trade because, I have that in my blood and I think it's fun to trade and try to see if I do well. But the reality is, I generally do better in the ones that just sit and do what they do and don't worry about it. So I do the trading with a very small amount. I discuss it and I'll talk about some options trade strategies and everything else. But I'll tell you what, if I traded some of these stocks, I don't know that I'd still own AbbVie, and it's done incredibly well for me, and it continues to grow, and hopefully it just does in the future. So last on my list, and definitely not least, is similar to AbbVie. I put a little bit of money in Intuitive Surgical Systems because I thought that's the future of surgeries. And it's done incredibly well. And I'm not saying that to brag or because I think I've done wonderful, but it's my point about not rebalancing. I don't know a ton about Intuitive Surgical. I know that they are leader in their field of doing, surgeries of robotics and things like that. And I think in the future, when we see our doctors, it's likely that that's what we'll be using to get surgeries. In fact, I would trust a machine more than I would trust a doctor not to slip and not to make a mistake. And I figure as the technology gets better and better and better, more people will get comfortable with it. But if I were having a procedure, like especially a serious one, like a heart surgery or something else, if their machines are capable of doing that, I'm so much more comfortable that a machine's wrist isn't going to slip and that they're going to know exactly what it needs to do. My vision of what the future of medicine is going to look like, including surgeries and everything else, is you'll go in and a machine will take a blood sample off your finger and they'll be able to do a diagnosis of whatever's going on and prescribe exactly what you need. And they'll be more accurate, there'll be less guessing. And I think it's the same with the surgeries and what Intuitive Surgical does. And I'm sure that they have to monitor the machines, replace parts, they upgrade and improve over time. But I've watched the stock grow tremendously, and if I'm lucky, it'll just continue to do so as that industry continues to become more prevalent and, you know, get more common for what we see. So those are my top 7, the largest holdings. The real strategy, and in my perspective, is buy and own. You can look for opportunities when good companies fall. Like recently, I added Archer Daniels Midland to my portfolio. Maybe it's a mistake, but they had bad news, and I think they're a good company. I try to look for bad news on companies I think are great to add into things and potentially expand my portfolio. But I don't diversify too much either. I try to limit it to a maximum of maybe 25 or 30 stocks because I don't, even that's a lot to try to keep an eye on. But I just go with names that I know. I try not to get too involved with the ones I don't know because it's too hard to own them forever. If I buy a risky stock that's flying around and it goes up a whole ton and I don't know a lot about it, at least for me, it's hard for me to hold on to something I don't really know. If Amazon doubles or triples or quadruples over the next 5, 10 years, I still know what they do and I'm comfortable with the company. I'm not worried that it's some new high flyer that I don't trust, that it's just excitement. Anyway, just my opinion. Have a great Sunday. Have a great weekend. Have a good week this week. I wish you all the best in your trading and your lives and everything else. And don't forget to subscribe and like and make your comments. Tell me the stocks that you guys love.